Good morning and welcome to the Rate Update with Dan Frio. I, of course, am Dan Frio, and this is your opening bell in regards to real estate and mortgages. So let's get on to the news, and you're going to see mortgage rates continue to climb at a record pace. So what's going on behind the scenes? Well, not really behind the scenes, but what a lot of people are missing. Federal Chairman Powell is speaking in front of a committee today and yesterday, and he's saying, guys, we're going to do everything we need to do to make inflation go away. And that even includes raising the federal funds rate. They just raised it by 0.25%, but in the next meeting, they're talking about 50 basis points. So a 0.5% increase in the federal funds rate at their next meeting in 6 weeks. So the markets are pricing that in, and I'm going to show you that here in a second. So that's basically what's happening in regards to mortgage rates, and that's why you're seeing things skyrocket. Other news that I just found out is we have 590,000 U.S. Homeowners still in the forbearance program. This used to be 7.1 million. Okay, so it's way down, but there's still over 500,000 people in the forbearance program. So when those come out, you might see additional houses come on the market. What's the economic calendar for today? Well, I was trying to hold off to get the housing sales for the day, but I can't hold off that long enough. But the previous read that we had was 800,000 homes were sold, and the expectations for this coming month, this would be the February numbers, is coming in at 810. So we'll see as that comes in. I'll post a video today. My video tonight is going to be talking about adjustable rate mortgages. We're going to show some comparisons between those and fixed rates right now. But the only really other news that we have coming in today is new home sales. Federal Chairman Powell is going to continue to speak. He might watch his language because he saw the effect that it did yesterday, but he might not even care because at this point, he's just like, I just got to get inflation under check. I'm going to, basically get rid of all the noise on the side and just get doing my job. Crude oil inventories. I'm also looking to see, that area. Are we basically depleted our oil, or is this getting back in track? Why? Well, inflation. Because when you have gas prices or oil prices going up, you're going to see that trickle through the economy and drive up inflation, and that's what's spooking the markets right now. I said, where are we with rates? Well, I did the report last night, as you guys saw, or hopefully saw, and I reported these numbers to give you a jump start on the day. So where we ended last night, my apologies, and where we opened for the day is right here. Let's go across these numbers, and I'm going to show you that, and then I'm going to show you some really bad news on where the MBSs are so far today and where that should be pushing mortgage rates. So let's get to it. The 30-year fixed rate is coming in at 4.66, up 20 basis points from yesterday's mornings. Between yesterday morning and close, these are the differences that we saw. Okay, so then we got the 15-year fix at 3.97, up 13 basis points. The FHA/VA is up 0.25% in 1 day, now to 4.25. We have the 30-year jumbo coming in at 4.05, up 10 basis points, and the 5/1 ARM coming in at 3.84, only up 2 basis points. Guys, these are the national averages posted by Mortgage News Daily. These are not my rates. I'm going to show you a little bit behind the scenes this evening. I'm going to actually log into my rate scanner that scans the whole country and finds the best mortgage rates out there for you. So basically what we do is we're the largest brokerage in the country. We take your data and we put it into a system that we use that scans over 130 lenders throughout the country. Why do we do that? And why does the size of the brokerage matter? Well, the size of the brokerage matters because you have an economy of scale. If you've never heard of that, basically that tells us, or that means, the bigger you are and the more volume and sales and numbers that you do, the better your pricing. So let's say it this way. If I sell a widget and I go to the manufacturer and say, hey, I need a widget, they're going to say, okay, it's $10. But if I go to that company and said, hey, I need 500,000 widgets, well, I might be able to get it for $1. But if I say, hey, I need 2 million, they might be like, we can give it to you for 50 cents. So that's where the economy of scale comes in. The next piece of this puzzle is it also opens the door for me to access over 130 mortgage lenders throughout the country that I can scan to assure you that you're getting the best rate in the markets. You can't do this on your own. So that's what we do for you guys and what we do for our clients. So that let's get back to this. This again is the average rates throughout the country that's posted right here. Then what we also monitor on my channel is what's going on in the MBS market. Well, let's refresh this, and we're having a complete crash again today. Look at these numbers here. Let me see if I can go back to a 2-day. I don't know if I can pull that. Let me go back to a 1 month chart. Okay. When this number goes down, let me explain this to everybody that's new out there. When this number goes down, okay, especially up through here, that means the price that we're paying for the mortgage-backed security bond is going down. Okay, what happens when that goes down is the yield or the rate goes up. And I've explained this on several videos that I did, but let me just recap it real quick for the newbies out there. So what happens, here's a bond, okay? So it's a $100 bond. And so to get that bond, I need to pay X amount today. So let's say I pay a high price. Okay, so the price is up. I pay $100 for that $100 bond. Okay, so I paid a high price. I give you my $100. A year from now, you give me my $100 back. Well, how much is my return on investments? My ROI, my yield? 0. Okay, because I gave you 100, I got 100 back. So now let's say I drop my price and I'll pay you 50 bucks. And I give you 50 bucks today, and a year from now, you give me my $100 coupon back. And so at that point, at the lower price, what is my yield? What is my rate? 100%. I doubled my money. So do you see how if I paid less for a bond, the yield goes up? So basically that's what I'm showing you here. When this bond price goes down, it brings up the yields, okay? 40 is a pretty big number. Yesterday we saw, I think it was 80 or 90. So now we're over 120 basis points difference in here. So what's going on? All right, so let me just recap this real quick for you just to give you the skinny behind it. The Fed came out yesterday and they said, okay, guys, we know we had basically interest rates at the historic low throughout ever. And then we also pumped out money to everybody, and we pumped out money in the money supply, and we did all this other stuff. Now I think we overdid it. Okay, so now everything's overheating. We put out too much money. Everybody has all this money, and they're buying stuff up, buying it up, buying it up, buying up. That's increasing prices of everything, thus increasing inflation because people are overflowed with money. You might not feel that way, but in general, that's what's happening. So that's what's causing inflation. They're saying, hey, we need to tighten things. Okay, their tune has very much changed within the last year. So that's basically what's going on behind the scenes right now. So later this afternoon, like I said, what I'm going to do is I'm going to post a video on where 30-year fixed rates are, and I'm going to compare them against the 7-year and the 10-year ARMs. So if you're interested in those numbers, please come back later this afternoon. But if you want to find out more about me and my team, all you need to do is go to therateupdate.com. We have a whole slew of features now. Over here, you can see we have a chat button. So you just click the chat. Actually, right now, it's still coming up on my computer. So if you want to do that, you can talk to me on that. Or if you want to give us a call, I'm sorry, this is inverse on my screen. So if you want to give me a call, you can call 844-775-5626, or you can apply online or even schedule a meeting with us right up there to schedule a meeting. So God bless, guys. Thanks so much for watching. I'll see you later this afternoon. Take care. Bye-bye.